Hey everybody, welcome to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002. If you can believe it, 23 years coming up this October. And this is coming to you from the live trading room. We've been in that service for about 5 years. And if you're interested in joining myself, a great group of amazing traders of all levels. Some are brand new to trading, and others have a lot of experience, like I have, and everybody in between. If you want to hear what I'm trading, my entry price, stop price, target price, reasons for the trade, go over to the subscribe button on drstocks.com, click on the live trading room, and you can add on the new live options room if you're interested for a discount price. All right. That's the little sales pitch. Let's get over to black box stocks. We're going to start here. And I wanted to talk a little bit about um, call flow, option flow that is monitored from this site. And this is the primary site I use to look for unusual trades that are going on in the options market. You know, the options market is a good read on the overall market because you really have to know what you're doing if you're buying big sets of calls and puts. And for the most part, there are ways of doing options that are non directional. But most of the trades, I have it filtered here in such a way that most of these trades are directional trades. And when you start to see a particular stock and a particular contract getting hit again and again and again in size, and especially if they're fast, right? If you get a whole bunch of orders coming in within a minute, you know something's going on with that. Now, some of that is just day trading, and we don't really want to worry about that. But if you have a person who's buying a whole bunch of contracts out of the money with time, you know that they have a good clue that the market, that particular stock, I should say, or that particular ETF is going to have a good run going into that expiration. So you want to pay attention to these kinds of things. Now, there's a lot of noise out there. You have to be wary of put flow because that can simply be some hedging, short-term hedging, um, and not necessarily a directional trade, just more sort of safety insurance against the potential of a market pullback. But we're looking for conviction trades in unusual names that really give us, you know, either this guy's going to be horribly wrong, and sometimes they are, of course, or this guy's going to make a lot of money, and maybe we want to piggyback on that trade. So I have my filter here. I'll show you. I've got $100,000 minimum trade as a size because not interested in the smaller sizes under that. I'm looking for what the smart money is doing. I've got this set at or above the ask. That means we're ruling out put selling. We're ruling out covered calls, right? Oh, these are only directional trades at going off at the ask or in some cases above the ask, which is really desperate, right? You have to be really desperate if you want that. And I've got stocks, ETFs, puts and calls, and all the different kinds of flow. There are all toggled on, so I'm pretty much going to see everything that is of interest to me. Now you're going to get, you're going to get Meta and Avgo and Nvidia and a lot of puts and calls on SPY and QQQ, Google, etc. The big trades are going to come through all the time, and that necessarily is not helpful. But what I'm looking for is a name that we don't normally see in the flow, and it, getting hit again and again and again and again, and that can lead us to some really nice trading opportunities. So one of the nice things about black box stocks is that if you click on the alerts tab down here, it kind of does a lot of that work for you, because although you're going to see Google and Tesla and Nvidia, and anytime you get really big volume in those guys, yeah, it's going to show up here. In fact, I'm not seeing a whole lot of anything like this one right here, SATS. I don't even know what that ticker symbol is. SATS. Maybe it's an ETF. I don't know. But it got a rapid fire bullish. Now, this particular line is not telling me how many trades went on, at what price, and how much was paid. We don't know any of that. But if you take the ticker symbol SATS and you go over to the flow tab, you type it in here. Let's see if we can find out a little bit more about these trades. Yeah, there they are. So these are only the trades above 100. Let's see if we go down to 50. And yeah, we've got a few more. They're all on the call side. Now, SATS is trading right now. We can see over here, had a little bit of a drop. It's trading around $20 a share. And look at these. This is interesting, right? $20 a share on the stock. What is this stock anyway? EchoStar Corporation. Sounds like a satellite corporation, maybe. Maybe it's a defense play. $20 on the stock. Somebody thinks that it's going to be profitable to buy the 35 strike. Okay, what's going on here? Now it's got my interest. The 35 strike, which is a good, 67, 70% above current price, out to January. So they've got some time. I think the person who's spending maybe about $1 million or close to $1 million here in trades on calls going out to January, and that's only today. We don't know what he did yesterday. We don't know what he'll do tomorrow. Knows something about SATs that we don't, and so they're investing now in anticipation of a big run. It could be a buyout, right? That happens quite often, and especially in smaller companies. Could be a very good report that's going to be coming out soon. It could be that maybe they see something technically in the chart. Maybe it's a squeeze play, but they really like this going out to January. Okay, so that's one example of how you would use option flow to give you a sense of some unusual opportunities in the market that you may not see otherwise, right? I wouldn't have known anything about SATs unless maybe one of my pro trader group was talking about it, or someone in the room mentions it because they saw something in the chart. But otherwise, I wouldn't have known about this deep-pocketed interest in long-term calls way, way, way out of the money. You don't go up to 35 on a $20 stock unless you're expecting a very, very big move. Now, let me show you another ticker symbol. So this was alerted to me by someone in my pro trader group, RGTI, a little more familiar of a ticker symbol. It's one of those quantum computing plays. And they started noticing this, right? So this is a stock that almost never shows up on the alerts tab. And when it does show up in the flow, it's usually 2 or 3 trades a day. You don't get 10 or 11 trades at this kind of size. I mean, there are only a few over 100,000. Here's a 200,000 trade. Here's a 140,000 trade. Here's a 166. Here's a $250,000, right? Now, current price is 11, and let's see, we've got, what are the strikes at? 11, 12, 10, that would be in the money. 16, that's very hopeful, right? That's a $5 spread on an $11 stock, 40% or so above current price. Here's a 15, here's a 13. Now, this guy's only going out to Friday, so that's not of interest to us. He's just probably day trading it. He'll be in and out maybe by the end of the day. But let's see, this guy has some time, right? He's going out to August at 16. This guy's going out to September at 12. Where's the 15 guy? August at 15. So again, is something going on with RGTI? We'll look at that chart in just a minute. We'll look at the SATS chart in just a minute. Maybe something is going on there that we want to pay attention to. And you're going to get that kind of information here and only here. I mean, there are other services. I've tried several of them. There's Bullflow, I think. Bullflow is one of the names. There's Cheddar Flow. I would recommend that one as a kind of second choice. Black Box Stoxx is a little bit more expensive than those others, but if you can catch a good discount, they have them several times throughout the year, then it's worth latching on to this and keeping that going. If you like momentum stock trading, forget about the options. They do have an equities tab, and this will give you unusual stock price movement. And sometimes these really show up. Like here's stats again, right? The $20 stock we were just talking about. Let's click on that and see what happened. So, well, it just triggered. This yellow crosshatch here is where the alert is. It looks like it just triggered. Wait, that couldn't be because it went off at 11 o'clock this morning, and it's now 2:20. Well, okay, I don't understand that. Maybe I never look at this tab, so I don't play it very often. Let's see. Let's look at something a little more recent. BIYA triggered at 2:18. That was just about 3 minutes ago, and you can see why. So it dipped. This is just a little penny stock, but it dipped way down early in the day. Is it a daily chart? Oh, never mind. That's the reason why SATs. Let's go back to SATs because I was looking at the daily chart. There's your alert. That's your alert right there. The alert went off at $20.43. It's now trading at $21.59. That's a pretty nice little day trade, right? And the alert is going to be a price movement plus volume. Sometimes it's a movement to the upside, it's movement to the downside. You have to discern that, whether it's a bullish or bearish alert. They don't tell you. The only reason why it has a green triangle here is because the current price is above that alert price. Let's see what's going on in BIYA, which is the recent one. Yeah, big spike right there. But it looks like the alert went off before that spike. So the alert went off at 570. It's now trading at 606. Can you make a living off of that kind of move? Sure. Yeah, that's a 7-8% move in 5 minutes. Yeah. All right. So just letting you know that that service is out there. That's about all I wanted to say about it. One last thing is that I have a link somewhere in my email that will give you a free trial if you're interested. I'm no longer an affiliate of Black Box Stock, so it doesn't matter to me one way or the other. But if you are interested in that free trial, you only have to get it. You can only get it through someone like me who at least used to be an affiliate, and I'll give that to you very happily. Give that to you. All right, let's take a quick look at what's going on in the indexes today. It's been a choppy day, as I said. Price exploration, which you typically see at the top of uptrends. You see it again at the bottom of downtrends. It tends to be a marker. Hold on a minute. I just lost track of the room. I just want to make sure that we have no technical. Yeah, okay. Price exploration. What does that mean? Well, when the tickers tape, the tape of the daily trend, 1 minute chart, 3 minute chart, 5 minute chart, whatever, goes up and starts pushing up a little higher on the highs, and then goes down and starts pushing down a little lower on the lows. You get sort of a megaphone pattern, right? Increasing highs, increasing lows. When you see that, typically after a long, good, healthy run higher, that is what we would call a topping process. Doesn't mean that today's the top, but it does mean that we're kind of getting into that area where the fund money has been made already. It's going to get a little more choppy, more volatile. You're going to get a couple of days down, a couple of days up. You might get more of a consistent pullback. You might get just a lot of sideways chop and noise and consolidation. But that's typically what you get when you start to see the intraday tape printing this sort of price exploration. Let me show you what that looks like. So we can see, here's the QQQ 5-minute chart for today. And here's the SPY 5-minute chart for today. Now it's interesting because the SPY is showing us some bearish price exploration to the downside. Like lows are getting a little lower. The highs are also getting lower. So that's more of a trend down day. But then you go over to the NASDAQ and you can see the highs are getting higher and the lows are getting higher. So that's more of an uptrend day. You put the two together because both indexes are driven by the same 7-8 stocks at the top, and you're going to see that that there are highs getting a little bit higher and lows getting a little bit lower in the major stocks that are driving the overall market. So that would be price exploration, and you're not quite seeing it nearly as much in the small caps. Let me pull that over again. It's just a classic trend down day, right? The lows are getting lower and the highs are definitely getting lower. Okay. So do we have to be a little cautious here? Yes. Have we had a really nice run? Yes. Have we captured a lot of that? Not perfectly with our swing trades. I just was saying in the live trading room that my own swing trading has been a bit messy, been hampered a bit by the thought in the back of my head that we are going to do another leg lower. So I've been a little bit cautious on some of the fun trades that we normally do. We've added on some hedges that didn't work out, and we have a trade on in gold that's just been an albatross around my neck. But what we do have on in the live trading room is this longer term wealth building portfolio, and we've been buying in those positions on the way down. And now that we're moving back up, we're making some really nice returns on that. So always nice to have a set of long-term positions for days like this or times like this when swing trading can be a little more challenging, but long-term positions do really well. We just had Tesla hit our price target today. We had Avgo hit our price target yesterday. So we're banking some nice wins, and most everything in there is also doing well. So that's always nice. Always nice to have that longer term position in your back pocket. I have a family fund. I hang on to those positions for at least 1 year, right, to get the tax break, but mostly to discipline myself from trading that account. I don't trade it. In fact, I've got stocks in there that I've been in for 10, 12, 11, 13, 14, 15 years. NVIDIA, Apple, have a little bit of Google, a little bit of Facebook. And when I have trading wins that hit a certain threshold, I take the money off my trading account and put it into the long-term account. And that's a technique. I teach that on my YouTube channel. It's a technique that I very strongly recommend to everybody who wants to retire early and hand on a nice legacy to your kids if you have kids. And if not, you've got a nice nest egg for yourself when you retire. So trade the market to make profits. When you hit a certain threshold, you don't want to trade a big account. It's just too hard, right? If you keep winning and your account gets bigger and bigger, and pretty soon it's a 7-figure account, you're going to have a hard time making good alpha with that because it's just harder to get in and out of trades. I take money off the top of my trading account when I hit a certain threshold. So there's some years where I can only take that tranche out maybe once or twice at best. 2021 was our best year of trading. I was able to take 3 tranches out. So that's nice. Take that money off the top, put it into long-term fund, and just leave it there. Just leave it, right? And if you don't know what to put it into, let me know because I can give you some good, what I think are some good long-term holds. All right. Back to the market. Let's go to some indexes. Here's your S&P 500. It has been a very nice run. It's kind of come in 3 bursts, right? So here's your biggest burst. Off of the April 7th lows, which was the absolute panic crash low of the tariff, China, 125%. What was it? 145% on China. No real good deals in sight. Everybody's talking about uncertainty and inflation, and the Fed is going to have to raise rates and blah, blah, blah. Everybody panicked on April 7th, and that was the low, panic low. One of the best times to buy stocks and one of the times you least want to buy stocks because everybody's talking bearish, bearish, bearish. The sky is falling and, the economy is going to collapse. We're going to go into the Great Recession all over again. So April 7th was the low. We had the first impulse wave up. Really, really big, amazing day. That was the 90-day pause. Market loved it. A little bit of a pullback, and everybody's thinking, we're going to double bottom or maybe even lower. Hit a higher low, and this is a second impulse wave, the strongest one right here. A little bit of a pullback, and everybody again is thinking, it's going to go back down to the lows. The tariffs haven't been priced in yet. GDP is negative. Jobs market starting to show some cracks. And then we're right back up again with the 5th up wave of this big impulse move off the lows. Now, I'm not an Elliott wave theorist guy, and I'm not saying that that's it, that we're now going to get an ABC pullback. I don't know. I'm not a prophet on the market, but I do say that right now, after this big long run, over 20%, back to at least a smidge of green on the year to date, that things are ready and time. It's time really for the market to start to cool off a little bit. Now, I don't think the NASDAQ is really going to do much to the downside. I'm looking at the NASDAQ chart and I'm not seeing other than today's little tiny green candle. But the volume coming into the Nasdaq has been really good. There's still a ton of cash on the sidelines that needs to find some alpha of the big money managers, and if they're not in stocks, they've been missing out, and a lot of them have. A lot of them have been missing out. In fact, I posted a thing last night, a chart last night in the main room that shows that fund managers have been at the lowest level of equity exposure since COVID lows. So that's actually bullish. That's bullish. They've been out of the market because they're afraid of a big crash again. They've missed out on this whole run. And if the run keeps ticking higher, they're going to have to jump back in at some point. And when they do, we're going to see another face-ripping rally. However, I don't think that's going to happen until we get a little bit of a pullback. I think that's kind of what they're waiting for anyway. I think they want to see the market cool off a little bit, take the risk down just a couple of notches, and give us some better reward scenarios. All right, but again, I don't really see I don't see anything here in Nasdaq that is telling me it's imminent that that's going to happen. And I think that's, where's your trend line? So your RTL, your resistance trend line, is still way up there. This is the all-time high. This is very close to the all-time high, and we're not that far away from testing that trend line. Now, I don't think we're going to get to that trend line without a pullback. But how far is the pullback going to be? It can't go down too far. We've got the 200 period right there. We've got a former resistance, which will act now as support. We're up on the top side of a downtrending LRC, which is typically where you get the weakness coming in, you get the rollover, you get at least some consolidation, and we haven't had any of that. The market just keeps trickling higher. So, the pullback, if we get it, is probably not going to be very deep. Where else could it get stuck? I mean, there is a volume shelf right in here, right? All these support lows. We're actually above that right now. Yeah, we're actually really above that. So, and just maybe a sideways week or two of tight trading range, a high tight base. But I don't see that happening too much in the Nasdaq. The S&P 500, it's a similar story, but things are a little more because in the S&P, you don't just have tech stocks. You've got, like UNH. You've got healthcare, which has been weak. You've got real estate, which has been weak. Material stocks, which have been weak. So you have much more exposure to the weaker sectors, and that's causing it to be a little more susceptible to the downside. We have broken out of that pivot high, which, my way of determining the bottom of a downtrend is to find a higher low. There's your higher low, and then a breakout above the most recent pivot high. And we've got both of those, and I think the downtrend is over. I really do. Not that we can't come back in, and maybe there's a little gap right here we could fill in. You've got the 21 period moving average coming up. It likes to come back and kiss that on uptrends, right? You don't want to come all the way back down to the 50. Now that the 21's above the 50, we don't want to come down to the 50. If this is a good, strong uptrend, we'll come back to the 21, kiss it, and rally back up again to the upside. The 200 period is broken, and we're above it. And that's always a good thing. That could act as some support on any sort of a soft pullback. So maybe a tight little trading range, like with the NASDAQ. The two indexes that concern me are this one, because it's been weak now 2 days in a row at the 200 period moving average. Everything is downtrending. We just, as of today, have a cross of the 21 over the 50, and that could go away anytime soon. With a little more downside movement that will unseparate. And this one is, now this is 30 stocks, right, with UNH in there and some other healthcare issues, pharma drug makers as well. And, there's some geopolitical risk with all of that. So I see the weakness, the weak link here in the overall market is going to be the Dow Jones. And we could add to that this Russell 2000, which is kind of doing the same thing. We are still well below the 200. We came into a volume shelf and can't get through that, right? The NASDAQ and the S&P, they're crashing through these volume shelves, but not the small caps. So, and it's a rollover already today. And it's almost a a bearish 3 bar reversal, right? Big up, little doji, kind of doji in the middle, and then a red bar today. Classic 3 bar reversal. It's not exactly that, but we did take out yesterday's lows without getting above yesterday's highs. And that's remember my friend, you write the 3-2-1 way of identifying candlesticks. This would be well, that's a 2 up. This is an inside day bar. That's a 1. And this is a 2 down. So it's a 2 up, 1, 2 down reversal, 3 bar reversal right there. And that tends to be a bit bearish. And so I wouldn't be surprised if we get on board some TZA either before the close today or sometime tomorrow. Bitcoin is, I would have to say, I know it's red today, but it was a big green up yesterday after a red day the day before. I think it's just putting in a flag, and it's doing it at a very key place, right? These are all all-time highs. This is a big volume shelf. So there will be selling every time it kind of gets up there above 105, 105, 107. You've got bag holders up there in that area, and they want to get out as soon as possible. They've been sitting through this massive multi-month drawdown, and finally the price is back to where they bought it, and they're probably not going to hang on for some profits. So that's going to cause this to stall right there. But there's nothing in the chart that tells me, there's not even bearish divergence up there that tells me that this is going to roll over and put in a big pullback. So let's keep an eye on this. It's going to be a little difficult to get some upside from it, but we are long in the wealth building portfolio, and I don't have any plans of taking our profits out of that anytime soon. Oil was up on, I keep doing that. It was up on news yesterday, big up, right? Big green stick on sanctions on Iranian oil, but I think that's probably about it for for this upside. It's a relief rally. We keep seeing lower lows and lower highs. It's still in that downtrending mode. We tagged the 50, came closer, tagging the 50-period moving average. We are in a volume shelf, a bearish one. And RSI got up above the 50 line, which is in a downtrend. That's typically, that's all she wrote, right? That's all she wrote. Inside day bearish bar today. I think oil probably will come back in. And of course, oil will get triggered bearishly on any kind of worry about a recession in the market. So here's gold, and I'm just kicking myself. I should have got out of the micro E-mini this morning. I'm still holding it, but I've been holding it for a while, right? I don't know where we got in. Somewhere over here, I think, on the breakout. And it's been an up and down position for me. But when it came down to the pink zone of the uptrending LRC and printed an inside day bar, that's typically a bullish reversal. And I'm not exactly sure at all why gold is so weak today. The dollar has been, where is the dollar today? Where's my dollar? There it is. Well, it's back to the upside. So it was a gap down, and it was very weak right off the open, the dollar. It's been very strong, as you can see. Gave a rollover yesterday. It looked like it was going to follow through today, which both of those things are good for gold, but it has rallied back up, and that's probably putting some pressure on gold. But again, I'm not exactly sure why. I assume this is probably the best assumption to make, and that is that gold has been a very good trade. It's been a safe haven, and a lot of funds plowed into gold. Central banks plowed into gold to cushion against the tariff economy. Now that the tariff economy is starting to clear up, people are getting back out of gold and putting that cash somewhere else. So, but keep an eye on gold. If it does get a bullish reversal here, when it could off the 50-period moving average, right? We were down here below the LRC, just above the 50, not too long ago, and it rallied sharply from there. We'll see. The only thing I don't like about gold, other than the potential for a reversal, is that the volume balance is leaning bearish here, which suggests, as I said, those who have been in gold for months are starting to take their profits off the table. I don't think central banks are selling, but these are probably funds doing that. Okay, that's all I wanted to show you there. I promised you those two charts. Let's take a look at SATs. Yeah, so you can see it's doing a nice. What is this company anyway? Let me just take a quick look here. Hold on, there's my FinViz. It is, yeah, it's a satellite thingy. It's not profitable. It's got some decent valuation, some good growth, fairly tight. Yeah, it's a pretty tight float, and over 9% is short. So it's a squeeze candidate, sort of. And it's coming out of a 3-bar reversal. Volume is still, it's above average, but still on the lower side. So maybe these are just people who are playing for a short term. But remember, this is the one with everybody going at 35. 35 is way up there. Would that be, no, it wouldn't be new all time highs, but it certainly would be new 52-week highs. 35 is way up here. It's a double bottom out of a volume shelf, and we still have a bearish MACD. RSI is kind of inconclusive. Let me see if there's any bullish divergence. Yeah, there is. Okay, so there's some bullish divergence down here off of today, the recent lows. Well, let's keep an eye on SATs. That could be a very nice longer term trade. And then what was the other one? RGTI. Yeah, so this one, I like the setup here. It's more of a bullish setup because it is a kind of a cup and handle-ish breakout. Big volume stick today, getting up to the top of the LRC. And of course, that's where you tend to get the rollover. But if you get up there on that kind of strength and that kind of volume, that's the kind of thing that typically just keeps going. It's going to have a volume shelf above 14. It'll have to contend with. It might just kind of float around like it did here for a couple of weeks. Then a big gap that was caused on, I don't know what. Maybe there was an earnings report in there. I don't know, but it's not listed. So keep an eye on those two as sort of fun money lottos. And if you want to go in I would probably play these with options. So do something a bit out of the money, give yourself some time. Don't pay too much premium for those, and then just let them run and see where they go. Okay, that's all I've got for you guys. I was going to show you a site, but I'm kind of running out of time. I need to get back into the room. Let me just see if I can take some. Let me see if I can take a few chart requests. So if you want to type the ticker symbols into the training and voice alerts, I'm sorry, not that one. Go tick them into the main room, the trading main room. Let me take a look at MSTR because there's a request to see if there is any bearish divergence, and I'm not seeing any. Now, there is a volume shelf up there, which is just to say that when it got into that area before, it rolled back over sharply, right? So the software that I use on TradingView will mark that area going forward, and it's up there again now. Now, it hasn't fallen out of that area, so it won't trigger a sell signal until it does. And sometimes, you get these volume shelves, and you just keep punching at it from below, and the more you punch at that supply, the lighter the supply becomes and the easier it is to break out. We could put a volume profile on here to see how many shares have exchanged hands at that level. That's can be another clue. If it's a big, long volume profile stick, that can act as resistance from below. If you've got not a lot of shares trading hands, that can be an easy move higher. I'm not going to do that, but just to let you know, there's no bearish divergence here in MSTR. This, of course, is a Bitcoin play, Bitcoin proxy. And as we saw, Bitcoin is a little bit problematic, but I think it's flagging rather than rolling over. And let's see, thoughts on MP. I keep seeing this ticker symbol referenced either in Twitter feed or StockTwits, or I don't think anybody in my pro group is interested in it, but I don't know exactly what. I mean, I've seen the ticker symbol, but I don't know what the company is. But here, let me just give you the technical read. So there's some good stuff going on here. Uptrending LRC, 200 long-term trend is up, and it's printing a kind of a 3-bar reversal, but the gap and crap today is not a good look. You've also got some pretty heavy volume on this downside. Now that can be a plus because when everybody gets out, right, heavy volume at the down at the lowest low of the recent downtrend, when you get a lot of volume heavy coming out, then the forward selling tends to lighten up because everybody's already gotten out. If everybody wanted to get out, they got out. If everybody got out that wanted to get out, then there's nobody left to get out, and then the market can only go up. So that may be where it's at. Um, I would say, this is like a lotto type of setup, a little fun money trade. You throw a little money at it and keep your stop under that pivot low down there. I would say just under 20, and you've got some bullish divergence in your favor as well. So technically, not horrible, but I have to say that this downside momentum is strong, the volume strong. It's going to be a tough move to get back up through that downward momentum. Momentum tends to beget momentum in the same direction. So I've got a few more here. BYRN. I don't know this at all either. This is a bearish setup. Of course, you've got the downtrending LRC. You've got the MAs are actually in the right position, right? The 21's above the 50, 50's above the 200, 200's rising, the 21's rising. So long term is up, short term is up, intermediate term is still falling. The thing I don't like about it, of course, is that you're up in the blue zone of a downtrending LRC that's typically like up in here, typically where you see it cool off and even roll over. And some of your best shorts come from the blue zone of a downtrending LRC, and that's exactly what this is. It's also looks to me like an inside day bar at the top of a move higher. That typically is like putting on the brakes, right? Inside day bar, bit of confusion. Nobody's really committed yet, and you've got bearish divergence in quite a lot of it. So I would suggest if you're long, take your profits. If you want to short it, I'm okay with that too, but I would not be adding long exposure here. Now you might just hold it if you have a good sense of the company and you like its forward prospects. This is a hold, but you're probably going to have to sit through a bit of a drawdown, maybe down to 22, 21 or so. Okay, what else? LPLA. Yeah, this is like a credit market kind of play. And yeah, this is bullish. Now the downtrending LRC, because it did have a really deep cut low on the April crash, has rallied all the way back to new 52-week highs. If that's not all-time highs, it looks like it's all-time highs. Very strong. This is a very good sector. You've got, let me just take a look at some of the stocks in that sector. LPLA, capital markets. I said credit markets, but I meant capital markets. So you click on that. You sort by market cap, heavy at the top, Morgan Stanley, Goldman Sachs, right? These are all financial stocks, investment stocks, investment banks, big banks that are doing okay, all things considered, but they will do really well once rates start to come down, right? There's a lot of pent-up demand for consumer loans, car loans, and home loans that are just not going through because the rates are too high and everybody's waiting for them to come down, especially when we know the Fed's going to at least cut twice by the end of the year. Yeah, here's LPLA at 7th on the list, 7th biggest trade in the space. And it looks to me, let's do a performance thing. So here's LPLA. Yeah, 43% over the last 12 months. Year to date, 18%. That's second best. Hood. Hood is number one over the year to date. So yeah, if you're already in Hood, hang on to it because I do think it's a good long-term play. LPLA, I would say it's on breakout. It looks good. It's a blue sky breakout, which means at least a 40-day high with confirming RSI and MACD. I would just hang on to it. I wouldn't necessarily buy it up there, but I think this space is very strong. Will only get better if rates can start to come down a little bit. What else here? Let's just take two more. Shop. We haven't been in Shop in a long time. Yeah. So, like a lot of these software plays, downtrending LRC, starting to see some bullish things happen in the MAs. That's good. They're just now stacked. and we've got a big gap up on earnings. That's always a good thing to see. Hasn't been coming down to try to fill that gap. That's also very good to see. We are up at a volume shelf, but it looks to me like it's got a pretty good chance of breaking through that. And then it would be testing up here around 128. I don't know if that's all-time highs. Maybe that is. No, it's not. 52-week highs. So yeah, this does look good. It is. I don't normally play this pattern when it hasn't filled out yet, but you could get something like that, right? Right shoulder off of the left shoulder and head, in which case, all this area in here would be consolidation. I probably wouldn't even get that deep. No, I like it. I like it. I like it. It's a hold. I'm not sure I would buy it today. It's a new long, but it certainly is a hold. You just want to make sure that you're skimming a little bit off the top into profits and raising your stop as you go. Let's do one more. Well, we're in Tesla. No, we're not. We hit our target price, but we do have the TSLA as a swing trade. And last time I looked, that's doing really well. Let's take a look to see where it might go from here. Yeah, so this is your big 380. Is going to be your next price target to hit, and it looks like a pretty strong one because it was support, 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 and then it cracked, and then it's resistance, and here's a close press toward the resistance, and now we're back up there again, getting close to that again. But it's at 350, so 350 to 380 is still a nice move, 7, 8, 9%. You can leverage that with TSLA or some calls, and the momentum here is really strong. Right? It's a gap and go, a gap and go, a gap and go. Right, a lot of green bars, big volume coming in. Tesla's had a bit of a mixed news feed, but mostly good. And of course, it got hit a little bit on the robo-taxi thing. That might have been somewhere in here. And then it got a big boost on CAGR for the Optimus robot, and Musk coming out of government and back into the company. I think that's happening still, is also a real good plus for the market. And I did see that the prices for Tesla are going up because of tariffs, but people are still buying. People are still paying it. But I think overall, Musk has been kind of bringing the overall price point of the Tesla range down over the years. And so a little bit of a bump up on tariffs is probably going to be absorbed very well by those that really, really like Tesla. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll be back in the room in a little bit, and we'll wind up the last hour of trading together. See you soon. Bye for now.